So what I want to share with everyone who's watching this video today or down the road, depending on when you finally open it up and take a look at it, I definitely would say watch it from beginning to end, okay? Because I get comments from time to time asking, is there any other particular strategy that I like to trade? I like to trade as well liquidity grabs, all right? I'm going to show you a very easy way to be able to identify and trade them. When you see these type setups, which happen and they do occur on a daily basis, because the reason why is that the market is creating and seeking areas of liquidity all throughout the day, all right? Even though primarily I'm focusing on, I know I kind of said that kind of probably weird and stretched it out and made it sound long, primarily. But anyways, what I'm trying to say is this. Most times I'm looking for either a supply or demand setup. For all those that are my following base, that have been with me for some time, that are subscribers to the channel. And by the way, if you're not a sub, go ahead and click the sub button now, because you are missing out on great topic information, as well as trades that I actually take and I break down and show you, just kind of going over the strategy. That's what I primarily talk about here on the channel, is the strategy in which I trade and how I trade it, why I trade it, and talking about how effective it is. But what I want to show you is that when it comes to the market creating areas of liquidity, you can trade these same type setups right here when it comes to the indices or indexes. All right, so take a look here. This was, let's say, November the 10th, 12th, 13th. So there are multiple areas where liquidity was created. And what you're going to find is that, which may seem to be or be created surrounding either a resistance or a support at a support area, you'll find the market will start to form wicks, okay? Meaning where it makes a high, it may push down, come back, retest the high, push down, then come back again and take it out finally. And this could work where it's taking out tops and bottoms, okay? So for example, right here, if you pay close attention on the 10th, you can see, well, prior to that, we were bullish to the upside. But what took place after that is where the market started making lows, lower highs, and lower lows to the downside. So basically, the market structure has shifted, and we started to see where it was a reversal where it started to move lower. Now, this is where you want to pay close attention to. You see this first run, well, you see this run to the downside, not the first run, but when the market made, say, for example, right here, this high, it came back, pushed lower, pulled back, made another attempt to go up and test the high up here, right? So I'm going to take an arrow line and I'm going to draw it through there right there. So basically it's creating an area of resistance at the top of this, was turning to be a swing to the downside. So we got a low, a lower high formation, and then a low. But we have a area of resistance where it's being built at. So wherever you have multiple wicks at the top of a swing high or swing low, those are what is created to be, or will turn into be, areas of liquidity eventually. This is what the market is seeking out for, all right? It's looking for those areas to run through from the tops and bottoms, okay? So when it makes this low here, it comes back. You see this wick that it made on this bearish candle eventually where it pushed lower? Look what it did. Look what it did. It came up and took out the top end of this area here. That's liquidity. Multiple wicks stacked up at it could be 2, 3, okay? I typically like to see more than one, okay? I like to see several wicks, at least 2 or more, to where the market is running and taking out a high, in this case here, above an area of resistance, breaking through it. And then what you see is the market pushes to the downside. Now, what does it do? Typically speaking, what it's going to do is going to seek areas where it needs to fill gaps at, okay? In this case here, it comes all the way back down and it tests this area here. Now, most people who know about trading supply and demand should know that this is a demand area. Aggressive buying to the upside, the market took out this area of structure right here above. Came up, wicked above it, and then, it made a slight break of structure above, okay? But if you notice what it did when it came up here and wicked above this area right here, it grabbed that area of liquidity and then it moved lower. But as it wicked above, it came down, pushed lower, came back, and there's another wick right here. So this wick right here is basically came up and tested the high again right here, okay, with the wick of this candle right here, this bearish candle. So it's creating another area of resistance back up to the tops right here. So basically you have, if you really pay close attention, you had this wick here, push down, the wick on this candle here, this bearish candle here came back, it touched this, trying to attempt to touch the highs again, came lower, and then came back for a third time pretty much, setting up this area here, okay? So there's resistance being built up at the top. Then when we finally get a push to the downside where it tests this area of demand at, it actually comes back up, okay, after rejecting that area, comes back up, and the wick on this candle here takes out that area of liquidity right here. Multiple wicks at the top with this resistance at. So then what it does, it runs lower and it takes out the low right here, okay? Now, it bounced here because this is an area of demand right here, but then it comes down and takes out the lows. Once it grabs an area, in this case here, the top's at an area of resistance and it breaks through and takes out liquidity, more than likely, okay, 9 times out of 10, it's going to test for lower areas because it's already done its thing. It's grabbed what it wants to do. It stopped sellers that was selling here out just to continue in the same direction. You have to think about it in terms like that. It may look and appear as if they're trying to push higher here, but once they are grabbing the money, grabbing and stopping sellers out, they're going to move in the same intended direction what was going on here to push to the downside. So market broke structure here, market broke structure here, and then it comes back up again right here. You see where it made this low right here? Then it pushes up, pulls back, okay? We get a break to structure to the upside right here. What does it do right here? It tests this high right here, the same wick that took out structure right here. It comes up there, now it's creating, well, actually, if you look, well, yeah, it's creating resistance right here at the tops again. It did it once here, twice right here, and now for the third time right here. Now, what does it do then? Okay, it tests that, it creates an area of resistance there. It pushes lower. It takes out this area of structure here within this leg here to the upside. Okay, it makes a double bottom here, double bottom, double tops. The market is going to push, either to the upside or downside. In this case here, back to the upside. But be careful because there's an area of demand resting, not demand, supply resting right here, in which it does slightly reject, pushes a little lower, but then it's going back up here because the market, there's liquidity resting at the tops here. Okay, all right, there's liquidity where the wicks are resting here. Okay, just think about it in terms of wherever support and resistance being accumulated at, or the areas being accumulated of. One test here, second test, liquidity resting above these areas right here. All right, it goes back up there. Look at this. The wick of this candle here wicks out above this area, grabs liquidity, stops the sellers out to flush to go lower, and it takes out what? Right here. It takes out this area of liquidity resting below. Why? Look, test here, came back, created resistance, came back, built support, resistance resting below here. Goes up here, takes out resistance right here, grabs, stops sellers out, grabs the money, comes down, takes out this area of support right here, which is what? Which is an area of liquidity resting at the lows at the bottom right here, okay? So you're going to see things like that, okay? So if you pay close attention, there's a trade setup when the market grabbed liquidity here. This is in the wee hours, or this is into the Asian session on the 10th or, the 10th. No, this is actually the 11th. The 11th of November right there, okay? Right here. Comes down, boom. On the 12th of November, grabs liquidity around 10 o'clock. Could look for an opportunity to go short. Comes back up, creates this area of resistance up here at the tops. Makes a double bottom, building liquidity. Comes back again. I'm covering it again. Grabs all this liquidity here, runs lower. If you caught this one setup coming to the downside right here and grab all this, let's say you got in here off of 21,239, pushes lower. Now, you can move down to a lower base chart and look for, at that point, okay, you see the market grabbing liquidity on the higher base chart. You say, Mike, what would you do from a lower standpoint, or lower time frame, a lower base chart standpoint? I will look to see if the market at this point here, we already are in an bearish mode in this case here, it depends. Here we're kind of moving sideways because we pushed up, pulled back, broke higher, broke structure here, but came back and broke these lows right here below this area here, but then came back up. So we're kind of moving sideways. It does make a new high here, taking out structure above here, and then breaking through these areas of structure here. So at that point, it would look like, or appear, that we are bullish to the upside because we broke above this area of structure here, creating this, I'm not gonna say higher low right here, even though it is higher than this low right here. It actually took out this low right here, but we did make a new high, breaking above this swing to the upside. So it made technically a higher low than this low here, breaking structure here, and also breaking structure above these areas right here, which were prior highs, okay? But anyways, I'm trying to say, highs to the left-hand side of the chart. It breaks to those areas right there and grabs liquidity. So I would, at that point, when I see it taking out liquidity on the top end, okay, and breaking through the area of resistance, it's wicking it out, I would move down to my lower base chart to look to see if we now start to see formation of a trend reversal on the lower time base or lower base chart, not time base because I don't trade time base charts. On the lower base chart, where we start to make lower lows and lower highs, breaking structure lower on the lower base chart, which is my 24 range chart. So I see, okay, on the 120, we're grabbing liquidity. On the higher base chart, now I'm moving down to a lower base chart and looking for a trend change, a shift in the market to where it's now making lower lows and lower highs. And I'll look for a pullback to a key area of supply to continue lower. Okay, and possibly test, aim for these lows down here off the higher base chart, because this is a build up of support here, and this is liquidity. Okay, and if you see here, if you got into a trade, say 238, and rode it all the way down here, you did very, very nice. Okay, you pick up a lot of points. So you get to see things like this that was set up on the charts from time and time again. When you see those beautiful type setups, then you know the great opportunities. A lot of times you'll see things like this maybe form when the market is actually ranging. Liquidity will be built at tops or bottoms. So it could be liquidity at the top, resistance, breaking it, coming down, or grabbing it, coming down, and building up on the bottom. So pay close attention. I just want to share that with you guys today when it comes to liquidity grabs and how to officially identify it, and not only that, but enter into those nice trade setups to where you can pick up a lot of points. Okay, but again, you may want to watch this video again and watch it again. This is a great trading strategy which you can use in times where you may not find great opportunity for supply and demand. Pull something else out. Okay, liquidity grabs, they work very well. Just understand what's going on there and how they actually work. But that's all I wanted to do was share that with you guys today. I thank everyone that tunes in on a daily basis and watches the video content. Now, if you're interested, because I get this quite often, and becoming an elite member, the link is down in the description portion of the video. For anyone that's not familiar with it, scroll down, you'll see a link that says become an elite member. Click on that link and 2 tiers will pop up. Choose the second one for $6.99, and that's going to give you direct access to, the trade breakdown videos, the video playlist, and a great video that I covered on market structure. Please do yourself the favor. For anyone that's interested, we've had tons of people that have become members, and they're finding success and opportunity in their own avenue. Okay, so, and I appreciate everyone that leaves me comments and letting me know, say thank you, Mike, for showing and providing the video content. Thank you for making the extra content for the private community for us elite members. I appreciate that, guys. I really do. I'm just here to try to share what I know in hopes that it inspires other individuals to want to become traders, whether it's part-time or full-time, and make a living out of doing so, okay? And you can do this even if you work a full-time job. You can trade on trade part-time. So, again, if you're interested in receiving all that additional video content, it's only $6.99 a month, okay? You can sit back and, watch the video content for a month or two, and then you're probably going to learn, I'm sure you're going to learn a whole lot. Because so many people have told me that the trade breakdown videos have been the change for them, has caused them, allowed them, has been the light at the other end of the tunnel for them to be able to become successful. So I appreciate you guys. But outside of that, if you're interested, find the link down in the description portion of the video. The Discord link is also down there. The first one is the Discord link. The second one is to become an elite member. But if you're not a current subscriber, please take the time to go ahead and sub by clicking on the sub button. Okay, make sure to do that. Also, turn your post notifications on by clicking on the bell. Turn them all on so you do not miss any other upload or content that I post. But outside of that, that's all I want to share with you guys today. Do me the biggest favor right now and click on that like button. You see that little thumbs up button, okay, next to the share or download button, somewhere to the right of the subscribe button. Make sure to click the like button. I greatly appreciate it. This helps me get the video content to where it needs to be in front of people who are interested in understanding this type material. Okay, that's all I have for you guys. I wish everyone a safe and successful, not say successful, but a great and safe weekend, and we'll get the rock and roll next week. So come over and join us on the Discord. See everyone on Monday morning, and I appreciate it. Take care.